The days of cheap money are well and truly over. Across the country now, it's a guessing game. How high will interest rates go?
Hey, Rick, come on. Come with me.
Welcome to Sunshine in Melbourne's West, where Rebecca's just bought this classic renovator's delight.
The shed we bought is asbestos central, so we won't be touching that anytime soon.
Before Rebecca even settled on this property, her variable rate jumped 3 times.
We negotiated the mortgage back in March. We had an interest rate of 2.59 and now we're 4.59.
Yikes, welcome to home ownership.
Thanks, I know, it's great to be here.
She planned for rate hikes and has a buffer, but she's now paying $1,000 extra each month. Is it stressful?
Oh God, yeah. Yeah, look, it's been, every other day my husband and I are talking about what we need to think about, what we need to change, what plans we need to put on hold.
1 in 3 Australians has a mortgage, and most of our loans have a variable rate that's set by our bank but informed by the Reserve Bank's official cash rate. Now, it's that official cash rate that's rising rapidly, and with it, the variable rates are too.
By the end of the year, we're expecting the interest rate to be around 3 to 3.35%. We may see a little bit higher, a little bit lower, depending on how the data goes for the rest of the year, particularly around consumer spending.
That puts variable rates around the 6% mark. It's a very different reality to the Reserve Bank's forecast just last year.
That the condition for a rise in the cash rate will not be met until 2024.
I am an economist, not a psychic. So as much as I can talk about what the data is pointing to, what our analysis is and what our research points to, at the end of the day, lots of unexpected things happen.
Those who wanted certainty, and that's about 40% of homeowners, locked in a fixed rate on their mortgage. Meet Alice Bullock. She bought her Brisbane apartment in December last year.
I love the location, and it's still got a really good sense of space because as soon as I walk in the door, I'm like, there's the river. It's like I'm home. The Reserve Bank, when I was buying, was saying that the interest rates weren't going to go up for at least another year, maybe longer. Despite that, I still chose to get a fixed term loan.
And it's lucky she did. She's on 2.69% until December next year.
I don't know what the rate is going to be in a year and a half, and I don't really want to think about it too much.
During the pandemic, the banks cut fixed rates down to record lows, and unsurprisingly, we saw Australians flock to fixing. The high being July 2021, where a record 46% of new loans were fixed.
But all good things must come to an end, and each month more and more of those ultra-low fixed-rate loans are expiring. This is the forecast variable rate they'll revert to. And by the middle of next year, when most people's fixed-rate loans will have expired, well, interest rates will be peaking.
People are finding that they're hit with interest rates that are double, sometimes even triple what they were previously on.
It's nothing like the good old days of 17.5% interest rates in 1990.
This is a recession that Australia had to have.
But it'll still have an impact.
It's all here on your doorstep, ladies and gentlemen. At 980, at 1,325, and it is sold here. Sold.
There's lots of superfluous spin-it auctions, but in the not-so-distant future, it's likely more houses will have to be sold.
We'll tell them on the phone, welcome home.
We won't see distressed sales the moment interest rates go up. It takes a bit of time to feed through the system.
SQM research provided to 730 shows about 6,200 homes a month are selling under duress, which isn't many compared to the usual pre-COVID levels of 15,000 a month.
My concern is that if we get to an average variable lending rate of somewhere around 7%,
$750,000.
I think we could see distress activity skyrocket at that point.
Selling, sold.
We probably would get up to 30 to 40,000 properties selling under distressed conditions, and that would represent a fairly large component of the marketplace.
Anger is already rising in the outer suburbs of Melbourne and Sydney. Mortgage stress is the #1 issue being raised in political focus groups.
Basically, all they want to do is talk to us about mortgage stress, cost of living expenses. People now, instead of choosing to purchase fresh vegetables, they go for frozen. We actually have people in focus groups tell us that.
Rates may be decided by the central bank, but it's now a problem for politicians too.
The question is what's going to happen in 2 or 3 years' time. In 2025 we have a federal election coming around, and if the federal government has not done something significant in their view to actually arrest some of this pain, they're going to look for someone to blame.